Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Wednesday, June 25th. Well, we had a pretty good kickback rally all day today. They wouldn't let them go, but things got overbought. Most of the indexes ran up into their resistance area, at least the Qs and the NASDAQ market did. The Dow didn't quite get anywhere near it, but they're still lagging behind badly, the Dow. But the indicator got way overbought, and it was just inevitable they were going to roll over, and they started to towards the end of the day. But clearly at the end of the day, after the market closed, RIM came out with some bad news about their earnings, and the market being as fragile as it is, that's all it takes, and everything got whacked pretty good after the close. I mean, the Qs were down pretty good, and the Standard & Poor's was down pretty good, and so I would expect to get some pretty hefty selling going on in the morning. It'll drive the indicator back down to an overbought condition, and then maybe we'll have another kickback rally. So I want to mention something about these kickback rallies and what they're saying to us. What they're saying is that the market is working great. The system is not broken at all. Yes, we're headed down. We're in a downtrend, but we're going down in an orderly fashion. The market will get oversold. There are people who have money and ideas, and they think the market's cheap, and they'll run in and they run the stock market back up again. So getting these kickback rallies is a very important part of how the system works. It's telling you that the system is healthy and it's working fine. It's not like we go straight down day after day after day after day without a rally like in '87. This is telling you that the market is healthy but going down. As I said a couple of weeks ago when the sell-off first started, I thought it would be tradable, and so far it is. And maybe at the bottom, when we finally get to the bottom, there'll be a straight down, scary little sell-off. That's what usually happens at the end of the market, at the end of a decline, is you get this big sell-off. It's usually frightening and scares the hell out of everybody, and people finally give up and they sell everything, and that usually marks the bottom. But we're not there yet, and I don't think I think we're months away from that. September, October is always those months that put in important lows, time after time again, and it may happen again this year also. So keep your powder dry until September or October, and we may finally get our bottom. But I don't want to get ahead of myself. One step at a time. So that's why I wanted to mention that about the healthiness of the decline. Even though we're going down, the system's working pretty good. Okay, we'll take a look at the major indexes in our final segment. We'll show you where they ran into resistance and where we think they're headed next. I also have a new idea tomorrow. It's another short. Red Hat, symbol's RHT. So in just a moment, we'll take a look at the chart, and I'll show you exactly how we're going to take this idea and turn it into some money. Now, don't go away. I will be right back. Okay, we're looking at a daily bar chart of RHT, Red Hat. This is a call on the short side. We'll be looking to sell the stock short tomorrow, 22.30. That's exactly where it closed. You may have to break price a little bit because I don't expect any more rallies in the morning. I expect some weakness. We got the rally today, but if you can get it off anywhere near 22.30, I think you'd be doing good. My target is down here at 17, keeping with my theory that all these tech stocks are going to test their March lows, and this is the March low, $17 a share. Now, some of my readers asked me if I would pick out a spot that I would think would be a reasonable spot for a stop-loss order. So the price I came up with on this one would be around $22.35. It's right above there. Now, that means the stock has to close above that price, not just trade through it intraday. Doesn't qualify. If it closes above that price, then that probably you should get stopped out. But I don't anticipate that happening. Okay, what do I see? Well, I see breakdown, breakdown, kickback, breakdown, kickback, and another breakdown. We're just making lower lows and lower highs, and it's starting to form into a descending triangle look, if you will. It's not perfect, but it is there. That was the first low we broke. This is the second low we broke. And this action here today is just a kickback into resistance. Also, it's got a V-looking top, sort of like that roof look I've been pointing out to you. You see it? It's a V-top. Okay, so let me recap that. That's RHT. It's a call on the short side. And I think when all's said and done, if we stay with it long enough, we can make $5 on that trade. Let's take a look at the stock I sold short this morning, CMO. Sold it short this morning at $12.39 on the kickback. What's interesting about today's action is this descending triangle is still intact, and the stock closed right on the low of the day. So this is this continues to be very encouraging to get down to our target of $9 a share. Okay, let's go take a look at the major indexes and see what we can see and where we think they're headed next. First, the Dow. You know, the Dow, this is the resistance area. I thought for sure it would even try to get up here, but it didn't get anywhere near it. So, I mean, it may try again, but it was just a very weak performance. I mean, the Qs, the NASDAQ, and even the S&P 500 put on a better performance on the kickback rally than the Dow. It may try it again, but today's action was sad, was the word. Transportation average. Little kickback rally. This is our main resistance. Didn't get there. It may try again. I don't think it's going to get through. It may back and forth a few days, or it may come crashing down tomorrow. I don't know. I just know that this is resistance. I don't know how many days it'll go back and forth before it rolls over again. Russell 2000. Kickback rally. This is our resistance. You know, it could get up into here a little bit, but I don't think it's going to. It just has this big rollover look to it, just like all the other indexes. And our target, of course, are the March lows. And we're quite a ways from there yet, so there's going to be some more selling pressure, you know, in this Russell 2000, along with all the other indexes. SPY represent the Standard & Poor's 500. Unlike the Dow, it got almost to its resistance before it gave way. It may try it again. It's hard to imagine with the way things are going after hours, because after hours it's trading down here. So I think maybe on this next push we're probably going to get down to our March lows here pretty soon in the S&Ps. The QQQs, the best acting of the group. This is our resistance. Ran up into it. I think I mentioned on my blog that it was getting into the resistance area, and that my little indicator was you know, very overbought. And I'm always delighted when that indicator works like it when it does, because it just gives you that level of confidence. I mean, every once in a while it goes astray, but over the long run it's been a pretty good friend. Anyway, the market's trading down in here after the close due to the RIM earnings, and also I think Nike had some bad earnings also. Whatever the news is, like I said, the market is so fragile, and any little bad news is going to take them apart. But as I said also, that these kickback rallies are important because it tells you that the system is still working, and we're going to work our way down here to these March lows, and then we'll see what's going to happen. Okay, that's my view of the market. Until tomorrow, this is TK signing off.